July.
Well, let's go to Sector Spotlight, which is going to be oil. And we didn't get to talk about this last week because we had the IEA release on Thursday. But, so oil prices were hammered last week. We have 60 million barrels being released, which, by the way, Scott, isn't that much.
Right.
OPEC estimates that by the year 2020, 100 million barrels will be consumed a day. So exactly. So the 60 million wasn't that much, but it was enough to kill the speculators. It was enough to drag on oil prices. Isn't this the time to start bargain hunting in oil?
Well, oil prices didn't really get crushed. We've come off our highs around a 110. We were holding 96, so it broke that level on the news, and we held 90. I think on Thursday was the day that it did so. It dipped below, came back above, and now it's hovering there. I do still think that oil goes lower. A lot of people are talking 85, 86.
I heard some 75s in there, too.
Ooh, 75 would be good. 75 would be unbelievable for the market and better for the consumer. It'll give them more money in their pocket, and I think the market will see that. But that whole mantra of lower oil prices helping the consumer, I don't think happens unless we see that 7 handle, which we're still, about $15 away from.
So if you wanted to buy oil now that we're down into the 90s here, is it not time to buy it then? You're going to wait?
I think you get a better entry. I don't think you buy it in the 90s, at least the mid-80s, and you might even get a dip into that 7 handle.
Let's go into the subsectors. I want to hit on oil services in particular. I was speaking to Dan Dicker, who's a senior contributor for The Street and an ex-oil trader, and he was saying that although global demand is lower, it's continuing to make higher lows, and that the drilling that we're going to see all over the world isn't going to stop, and demand will continue to climb, which is oil services. So I want to go to OIH and see if that corresponds with perhaps a buying level.
The OIH is held up, over the course of this move, but it's still being controlled by a macro descending trend line. This is the macro level, and actually this time couldn't even get back up to there like you saw these 3 times. It's starting to accelerate a little bit to the downside, getting weaker. So I think that the 200 days holding for now, but if this market breaks, this group will break with it, and you could probably see 135 on these OAHs, and if it gets extreme, you could even see 127.
So better buying levels down the road then, maybe?
I do think so.
All right, I want to hit another subsector, refiners. Let's go to Frontier Oil, FTO. Now, these were making tons of cash as the spread between WTI and Brent widened, but a lot of analysts don't actually expect that to last, which would be bad for the refiners. But I think that FTO is a special case. Last week it had a horrible day on Friday, but then made 52-week highs on Tuesday. It is joining with Holly Corp. Could be a possible buying opportunity, and I wanted to get your take on that.
I saw the day that it had, I think, on Thursday, which was pretty brutal. Actually, no, this was Friday.
It was Friday where it's down like 8-9%.
Well, here's a small upper range. This needs to hold to keep upside momentum. This broke with a potent day, one of the days that we say is a day to take notice. Okay, it engulfed this entire, I would say, week time span. I think that this thing could see 26 and a better hold 24. I wouldn't be in such a rush to buy it, but it might just need some time. But this is the type of day where if you're in it and you're in a tier 2, tier 3, you take some off because it's going to need more time. That could be an emotional day because of the news and the headlines, but technically that's something you don't want to see.
And keeping in mind that spread between WTI and Brent, because if it falls, they're going to lose their windfall of profits.
That's why I guess some people ran for the hills right there.
All right. Let's go to, I want to round it out with Exxon, the big integrated. How is that holding up after the IEA announcement, and what do you do with it?
A lot of the traders are trying to look for a short there. They were trying to look for it below 80, and it finally happened. If you look at it here, this looks pretty bearish. This is a big support that it was holding. It held here, held above there, was hugging it there. Now, it broke this 79 area. It's heading to the 200. I would see how it acts around here, but this is still a very bearish pattern. I don't think there's a rush, to buy this one, and this could pressure that whole group.
So it seems like, in general, this oil trade right now is for traders and not for long-term investors. Would you agree?
It is for traders, and I would say for investors, wait, because there is some quality here. Exxon has a dividend, and it's a behemoth of a stock, but it looks like it's under pressure now, and don't be in a rush to buy it as an investment. Wait for that reversal type setup, and it could happen around the 200-day, but it might not.
All right. Good stuff. All right, we'll be right back with your stock picks for today, as well as how to trade gold and silver right after this.